January's numbers tell a story that I think a lot of people are misreading. Sales happened, homes moved, offers were written. But here's what actually changed. Buyers looked at a lot and they passed on most of it. And when something made sense, they moved. Same people, same market, completely different filter. Now let's start at the board level. In January, across Greater Vancouver, there were 12,628 listings. 1,107 properties actually sold. That puts the overall sales to active ratio at just over 9%. That's firmly in buyers' territory. So buyers have options. Now let's narrow it down to Vancouver proper. On the west side, overall benchmark pricing was down about 2.8% from December to January and down just over 6% compared to last year. On the Vancouver East side, benchmark prices were down about 1% month over month and down roughly 5 to 6% year over year. So we're not talking about a market ripping higher, and we're definitely not talking about a market that's frozen. We're talking about a market that is softened year over year. And buyers know this, and that's the key. This isn't a slow market, it's a selective one. And January matters because it strips out the noise. There's no spring optimism, no artificial urgency, no panic. It's people moving for real life reasons, not because they got caught up in the hype. And what that told us is simple. They moved when value was obvious. They ignored when it was not. That's the rule right now. And the emotional shift is subtle, but it's real. A few years ago, buyers would walk in and ask, how fast do we need to move? Now they walk in and say, why is this priced like that? It's a completely different mindset. They're not afraid of missing out. They're afraid of making a quiet mistake because overpaying 5% in a rising market feels recoverable. Overpaying 5% in a flat market feels permanent. So they slow down. They compare harder. They walk away from 4 to 5 properties without even blinking. But then when the sixth one makes sense, they move, not emotionally, but decisively. Now let's separate detached from the condos because they're behaving completely different. On the west side, detached benchmark prices were down 12% year over year. On the east side, detached is down about 8% year over year. That's real downward pressure in that segment. But condos tell a different story. On the west side, condo benchmark prices are down roughly 4% year over year. On the east side, condos are down closer to 8% year over year. So yes, condos have softened too, but they're not collapsing. They're adjusting. And condos behave differently because they're more comparable, more interchangeable, more, I'll just buy the next one. If you're selling a condo, you're not competing with the Vancouver market, you're competing with the 5 closest unit buyers have saved on their phones. That's the real competition. Now let's zoom into downtown specifically. In the downtown attached market, in January, there were 822 active listings and 72 sales. That's about a 9% sales to active ratio. By standard definition, that's a buyer's market. Average days on market were about 39 days, and homes were selling about 5% below the list on average. That's not zero activity, that's buyers having options. And when buyers have these options, they filter harder. And that's why days on market can feel misleading right now. Some listings aren't sitting because no one wants them, they're sitting because buyers are comparing them more carefully. They're looking at what sold last month, what expired, what reduced. They are building a mental map of value. So when something is priced for last year, they don't argue with it. They don't negotiate aggressively. They just move on. That's not fear, that's discipline. And downtown condos show this clearly. Certain buildings keep trading, others don't. And it's not random. Buyers know which buildings are well run. They know which ones have clean depreciation reports. They know which floor plans make sense. They are voting with their offers. Reputation is compounding. Buildings that were proactive years ago are benefiting now. Buildings that kicked issues down the road, well, they're paying for it. Now, before we go any further, let's zoom out for a minute and touch on the rest of the region because downtown doesn't exist in isolation. West Vancouver is still selective, especially at the higher price points. Luxury detached is trading, but it's trading when pricing is sharp. Aspirational pricing is getting ignored quickly. North Vancouver feels steadier, particularly in townhomes and family-oriented condos, but even there, buyers are comparing hard and negotiating with confidence. Richmond remains active, but it's very numbers-driven. Clean, well-maintained condos are moving. Overpriced inventory sits longer than it would have a year ago. And Ladner, well, it's in its own lane. Smaller buyer pool, tighter inventory. When something fits the family profile at the right price, it trades. When it doesn't, it just waits. So across the region, the behavior is consistent. Selective buyers, disciplined pricing, clear positioning wins. Now let's talk about sellers, because this is where the shift really shows up. Most sellers still feel like they're early. They say, well, let's try it here and see what happens. And I understand that. No one wants to give it away. No one wants to underprice. No one wants to leave money on the table. But here is the reality. You don't need 60 days to know if something is off. You usually know within the first 10 to 14 days. Showings without second showings, that's feedback. Second showings without offers, that's louder feedback. And if serious interest hasn't showed up in the first couple weeks, the market has already spoken. Not emotionally, but clearly. And in this market, waiting does not reset the story. It just compounds it because buyer attention moves on. And once your listing feels stale, it doesn't come back fresh. It comes back questioned, especially in condos, because buyers know exactly how many similar units exist. They know which buildings have multiple listings. They know which layouts repeat. So if your unit doesn't stand out on price, it has to stand out somewhere else. Either it's condition, layout, exposure, view, something. And if it doesn't, it blends in. And blended listings don't convert. And here's the truth. If you don't know which 5 listings buyers are stacking your property up against, you're gambling. And gambling with your equity is never a good strategy. Now let's talk about price reductions. Small reductions don't fix positioning. They signal hesitation. Buyers see a 2% reduction and think, well, they're still not there yet. Meaningful alignment resets the conversation. A modest reduction might save you $15,000 on the sales price, but it can cost you 3 weeks of visibility. And in those 3 weeks, buyers are comparing you to fresher listings. That trade isn't neutral. It's expensive. Compare that to the condo that's positioned correctly. It might not sell overnight, but it attracts the right buyers early. They watch, they revisit, and when they see movement, they act. That's how deals are getting done right now. Quietly, methodically, without drama. Now, here's what January really proved about rates. Buyers aren't waiting for rates to drop. They're waiting for value to make sense. Rates affect affordability. They always will, but pricing determines value, and value closes deals. There's economic noise, there's headline chatter, but buyers are separating macro headlines from micro decisions. They're not buying Vancouver real estate. They're buying one specific condo in one specific building at one specific price. And that's how risk is being evaluated. And that's why general advice fails. Wait for spring, buy now, sell later. That means nothing without context. Some sellers should sell right now, others shouldn't. The difference isn't the market, it's their positioning inside of it. The sellers winning right now, they're not lucky. They've controlled what they could control. Price, presentation, strategy. The ones struggling are the ones testing. They're still waiting, still hoping, but the market, it just didn't disappear. It matured. And mature markets reward discipline. So here's the takeaway. Prices, yes, softer year over year. Inventory, yes, it's giving buyers options. Sales are concentrated in buildings with trust and correct pricing. Selective buyers, honest pricing, clear outcomes. That gap used to be forgiving. It isn't anymore. The most useful thing you can do right now is zoom in. Your building, your block, your competition set. That's where the truth lives. And if you want clarity on exactly where you stand, not the market, but your position inside of it, that's where I can help. Not with generalities, with precision. Thanks for watching, and we'll see you in the next one.